Good morning, everyone. How's everybody doing this morning? Just having some issues with the screen share here. Don't know why it's not sharing the entire screen. Apologies. Okay, that worked. There we go. Apologies. Hope everyone's doing well. So, let me know how this streaming thing is going for you folks in the room. Hey, Lonigan. Hey, Dave. Not seeing our regular crowd in here, so want to make sure that they are on the screen share. What I'm going to do is I'm going to try and, if there's a lag for the people in the room, that sort of thing, I'll do an experiment after this and see if we can run Zoom and YouTube live at the same time, as some people have complained. Anyway, we'll work out a solution. Hey, Goldeneye, how are you? Good to see you this morning. Well, we definitely have an interesting situation here. Let's go take a look at this market and how we are going to deal with it going forward. You can see already that the overnight dipped underneath yesterday's low and came back up. I was not awake when that happened. We're in pure distribution right now, and overnight inventory was long as we were distributing above yesterday's close. Now we've lost the bid, and the market is rotating lower. On a longer time frame note, everyone keeps asking me whether we found the low. And if I knew that answer to that question, I would be on an island somewhere, sitting on my 300-foot yacht. I don't know where the low is going to come in, and nobody really does either. The market will tell us when the low gets put in. And that's not the question you should be asking yourselves as traders. The questions you should be asking is, how the hell do I trade this without losing my shirt? You got to be very practical when it comes to these big moves. Everybody wants to say, oh, yeah, I shorted it at 58.20 and I covered at 56.20. Nah, you didn't, right? There's very few people who actually have the skill and capital to pull off trades like that. Okay. That's just not going to happen. We have to have a reasonable, practical business setup in which we do business. Otherwise, you just don't do business, right? This is not a casino. These are not games of chance. It's a business, right? So right now I'm looking at this balance zone, and I think I was a little too wide here. So I was looking at that low and that high, and then we looked above that low, we came to that high. But I think it might work because the zones are so the ranges are so large. Let me just double it to the downside and see what we get and see if it works. Remember, the first thing you do now, I've just sat down at the computer or stood up at the computer because I have a standing desk, and I'm watching to see where the support and where the resistance is in this market. Now, support comes from bids from short sellers, resistance comes from trapped longs who start to sell, and then wholesale traders who undercut their price because their cost basis is the lowest. Everybody should write this down. He who has the lowest cost basis wins, right? Right. He who has the lowest cost basis wins. Okay, that is really how, you know, markets and business is done. I'm just going to put the link in the room again just in case anybody in the room is not seeing this. Also, being 3:30 in the morning in New York, we've lost a few viewers until the time changes again in UK, and we jump forward ahead an hour. It's a little bit of a pain. You notice that always these markets always act weird and crazy stuff happens when you get time changes and things like that. It's not tinfoil hat stuff. It's just I'm sure people are just tired of watching their equity go down. So what I'm going to see is whether these levels work. They are a little big. You know what? I should redo these levels, folks. Since we're waiting for this thing to find the bid, let's redo these levels, and then everybody can see how I find them. So what I'm doing is I'm trying to find lows and highs where the market has a high and a low. And when you look above that high, you come right back to that low. Right? Sometimes you can futz with these things for hours, but generally your eye will find a nice balance. And what I'm looking at, you see here, here, and here, they sold at 34 and a quarter, right? And I'm looking for where they stop selling. So I found that they're stopped selling here at 26 quarter, right? And then there's a little look below 26 quarter and fail, tag 26 quarter and up. So let's try that. I apologize. But that's how I'm doing those balance zones. Now, I'm going to talk about something that most people don't talk about. Look at the way we closed yesterday. Since we're waiting for the market to find the bid here, let's let it do its thing, right? We sold off. L period took us down to 55.71, right? And change. And then M period, N period, and O period were all higher, right? N and O is the 4 to 5 trading. Then we did a nice dip underneath, right? Tested yesterday's low, came back up above it, but the market has been in distribution mode after taking in inventory here. We were up here for hours, 4 hours distributing. That's normal market behavior. After a sell-off, we'll take that cheap stuff and go sell it higher at night. If it's truly panic selling, right, overnight would be much lower, and it'd continue lower and lower and lower as there are no bids. Okay? So that's one thing. The other thing is, did anybody yesterday get an email from their futures broker saying that margin was being raised? You guys in the room? Anybody in the room? Wow. Maybe we'll have to go back to Zooms because the participation from the room is pretty brutal. So yesterday you got a margin increase notification from your brokerage firm? No, you didn't, right? That's what I'm trying to say. Okay. If you're not getting any emails, that means that the brokerage firms are not nervous. If the brokerage firms are not nervous and they're letting you trade on $40 margin for a micro, things are not that bad. When things are really bad, immediately the first thing they'll do is they'll shut retail traders off, right? And increase their margin. Make you pay $400 for a micro and 3 grand for a mini, right? Why is that? Because retail traders can't manage risk, right? Also, the big stocks, the volume was very, very light, right, Lonigan? Very right, light. This is all margin reset. People who are buying these markets on margin are just getting margined out as we take swing lows. And you'll notice right now we are back to that area where we made the big move in September, held it in November, October, and then made our new high. So we're right back to this area here, that 55.16 to 56.04 area. We're just right in that spot, right? It's a margin ripoff, Raj, right? This happens. You've been with me now for 5 years, right? So what happens is people buy crap that they can't afford, right? Just like, people who go and buy a fancy car, they can't afford the payments, it gets repoed. So they just repoed everybody's position, right? If you paid for stock in cash, you're not going to sell it, right? So we also have to reset our cost basis for the year, right? It's a new year. So, and also, of course, economic policy, yada, 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 all that stuff, right? But in terms of business, we have to get inventory to go sell again up here, right? And that involves this big shakeout. So when we took that low, right? And we started taking these lows, everything above it started to fall out, right? It's not that complex. Just everybody really loves to overcomplicate this crap, right? So as soon as you start taking out lows, here's the SPY, right? Here's the SPY. As soon as we took out 5650 or 50 565.21, as soon as we took that out, everybody got margined out, right? And this balance stuff works on any market where there's inventory, right? So it'll work on futures, it'll work on um, currencies, it'll work on anything, right? Because it's all about cost basis. Every market has an inventory. This is a chart that represents the inventory of ES, right? Just like if we were selling potatoes or oranges, it's just a sales chart. So that's all we're doing. We're just selling a product. And wow, let's go see if these levels work. Yeah, so this balance stuff, it works on every market. I used to do levels for the Nifty, but then people lost interest. And so people will all come and ask me to do levels, do it for the Russell, do it for the NQ. And then after about 2 weeks, nobody asks for levels anymore, and I keep doing them. So there's no reason for me to do the work if nobody wants it. Now, let's see if we have a seller at 56.25, 26 and a quarter. Okay? Because there should be inventory parked above it. So what you're looking for now is if you're doing the look above and fail of 26 and a quarter, nope, it seems to be accepting over 26 and a quarter. Let's see if we come back and hold 26 and a quarter. So that little move down from the 30s down to 18 might have flushed out a good amount of inventory. Let's see if we hold 26 and a quarter, then we'll start rotating up. And you know where the sellers are. They're at the top of these candles. So if you are going long, right, then you can anticipate where the selling is going to be. You're going to have competition, right? So as soon as you're long, you're a merchant, right? You are a merchant with product, right? So I'm long. I'm just going to try a couple of micro trades here to see whether my brain is working. And I bought one at 28, which was a bad trade. So I'm just going to scratch that. Right? And I'll retake it if it holds this level here. I might buy two. Right. But if we start offering under 26 and a quarter, I'll scratch it. My biggest problem in my trading is that I will trade too early. Right. And I think yesterday you guys saw me do that again. Yeah. So I'm out. Okay. So I grabbed it at 28, looking for 30, 31. And as soon as I realized that, I was like, oh man, I'm too early. I'm too early. I'm too high. Right. So let's see if we stay under 26 and a quarter. Right. If we stay under 26 and a quarter, if the offer just keeps going down, it's going to come back down to 20. And it's okay to be wrong. Just be wrong small. Don't be wrong with a lot of money. The other thing about being wrong in trading is just admit you're wrong quick. Right. Why did I take that long, Elliot? Because I'm not thinking correctly. I was wrong. So now I'm short 23 and a half, covered 22 and a quarter. Right. I quickly reversed that and took a short just just to see whether or not my brain is working, right? My brain wasn't working here, right? So that's a really good question, Elliot. Why did I take the long when inventory was above us? Because you screw up every once in a while. That's trading. That's life, right? This is a business where you're going to make mistakes. First trades of the day for me generally don't work because I'm finding my way, right? You tend to move your stop loss a lot. How do you fix that? Well, you fix that by trading, by really, really focusing on practicing the execution of the look below and fail. The problem is that if we switch from YouTube to Discord to type, when we open YouTube, the stream starts from where it left off, and we have to merrily. Oh, so are you watching YouTube on a PC or on your cell phone? I didn't know that. What I'm going to do is today I am going to test running Zoom and YouTube at the same time. So the people in the room get the Zoom. There should be no delay. As long as it doesn't crash the computer, it'll be okay, right? Because we have people in the room complaining that there's a delay. So we'll give that a shot. Yeah. So getting back to Elliot's question, right? You will sometimes take trades that you're not thinking about. Maybe you're not mentally as sharp as you should be. That's going to happen. We're not machines, right? And I think I got sucked in by that by that big green candle, right? I thought that there was buying. I thought there was bid support. There wasn't, right? Now I can see that there's a seller at 26 quarter again. I think I'll let the market work that area out before I engage the next time, right? So that sell off took us to 18. The next sell off took us to 23. So this time, let's see if we can hold 26 and a quarter. Yeah, I was wondering because when I started the session, I'm talking, only two people are talking in the Discord. So I was like, oh crap, we just pissed everybody off by putting this on YouTube. It's an experiment, right? You got to see if it's going to work. Let's see if we flushed it out. Now we know that there's a seller at 28 and a quarter. So if you are long, right, you know that there's going to be competition, right? So I took it again at 27 and 3/8 on two. I've got a sell order at 29 and a half. I'm out one. And I'm following the market up with my stop, 56.30 and a half on the other contract. 31. I'm out at 31. Flat. Okay. So why did I take the long again? Because we flushed that inventory out, and because on the second flush, we didn't get down to this cost basis here underneath 22. Do you see that, Elliot? Right. So this flush took us under 18 quarter. The second flush took us down to 22. So there's a little position here between 18 and a quarter and 22 that's a mini cost basis that we didn't violate. So right back up. Right. Nice. Okay. Brain's working now. Right. And that's the way I'm going to trade until I get a sense of this market. A lot of people will be like, oh, you got to trade and you got to make 100 grand a day and stuff like that. And listen, folks, right? When you're a retail trader, you have a limited amount of capital, right? Even if you're trading a couple of $1 million, it's not a lot of money in this market. You have to really focus on your risk and really not make, you know, as Red Foreman would say, dumbass decisions, right? So use your stops to tell you what's going on in the market. Stops are something that we use to get market intelligence. They're also insurance on your account. So they are a legitimate business expense. Traders who trade without stops, right? It's like playing Russian roulette. It's only a matter of time before you blow out your account, especially in markets like this. So there's that rotation from 56.20 26.25 up to 34.25. We stopped a tick short. Okay. Oh, there we go. Right. So there's the look below. See, I took it here, stopped myself out. It came back down. And then when it came back up, I grabbed some here and sold into the 30s. Now, I didn't hold the trade for as long as I should have, but that's okay. Right. Now, the next seller is going to be right here. And the next sellers will be in this area here. Why do I care about the sellers? Because they're the ones who make the market, right? The sellers hold the inventory, right? And the buyers are what we call order flow, right? They're the customers coming in the store. Order flow trading is just a fancy way of saying customers, right? It's a marketing term, right? All markets, all traders are order flow traders. Otherwise, what are you trading? You trading some alien space instrument? No, you're trading the ES, and order flow is what moves it. Order flow comes in, inventory is held by dealers and large size traders, and they match the order flow to. Sorry, I'm laughing. They match their order flow, the incoming customers, to their inventory, right? And that's business, right? There's nothing esoteric about it. So let's see if we could take out the upper stops at K. And then if we put in a new overnight high, look for the M high. If we take out 58.41, right? If we take that out, or sorry, 56.41, good grief. Got some glare on the monitor here. If we take out 56.41, 42, it'll run some stops. Interesting perspective on sellers, Tostino, because that's what I was. I was a seller. I was a seller my whole life. Hundreds of millions of shares. So when you actually create a market, you take a stock public and you create a market, and then you find ways to bring people in to buy it, you kind of understand how markets work because you're actually creating a market. You market the stock to bring people in so you can unload it, right? Wall Street is a business of distribution, right? Investment bankers create the product, salespeople sell it, and traders drive the trucks that carry it out the door. That's all it is. There's nothing more. If anybody tells you it's anything more complicated than that, they're either lying or they don't know, right? We're here to sell product, right? Yeah, and if you're long, you need to know where your competition is selling. Otherwise, they're going to take your clients. You can take your customer. Now, London is opening. It's a little frisky. Let's see what it does. Now, when it's going back and forth over a level like 34.25, the top of my zone, I'll just leave it alone. I know that there's a seller at 35.25. Do I know enough to short it? I wouldn't short it until it gets back under 34 and holds. If it's choppy like this, you have to have some situational awareness and you just kind of chill, right? Yeah, so here's the thing. That's why we watch the offer. The offer is this red line, which is the lowest price that they're willing to sell at, right? The bid is inconsequential. The offer, if the offer is moving lower, right, then they need to reduce price to capture the buying, right? If the offer is moving lower, that means sellers are competing, right? This is what happening now is what we call a backfill. The market went up to create demand. It's going back and filling in that demand with supply. When it finds a large buyer, that red line, the offer, will lift. It will keep going down until it finds a large buyer, probably somewhere here at 30, right? And if there are no buyers here at 30, we're going to come right back to 26.25. See how it's starting to lift? But if there's not enough buyers, it'll come right back down. Watch the offer, right? That was a nice look above and fail. I missed that one. See, look how the offer is starting to lift. It found buyers. It gets close to its cost basis. It lifts to make people run and chase the ice cream truck. This is just commerce, ladies and gentlemen. There's nothing complicated about this. Execution is a pain in the ass, right? No, cost basis gets renewed over time because the wholesalers are constantly buying and selling. That's why, those volume profile traders, who use volume profile, they'll use volume profile and they'll call it like, the large volume node, they call it, right? That's just cost basis. Shaz, fill in demand with supply. Can you explain? You're always confused by that. Okay, Shaz, you got 1,000 oranges. You spent 10 cents per orange, right? You put the oranges in your truck, you go to the market, you're selling them for $1. Okay? A bunch of people come in and they buy maybe 300-400 oranges. So you raise price to about $1.20, $1.30. You still with me? Now, what happens when you run out of buyers at $1.30, $1.20, $1.10? You start marking down the price of your oranges, right? Right? So when you take a market higher, you create demand. That's when you bring the sheep in. And then you fill in that demand with supply because you don't have to sell just 2 oranges, brother. You got to sell 1,000, right? The distribution of size is the basis of why markets exist. To distribute size, right? We're not selling 3 contracts, we're selling thousands, right? You got to get it out the window. See, you got to turn your inventory into cash, right? That turnover of inventory into cash, back into inventory, back into cash. That's why Jane Street makes, what did they make? $16 billion last year? Market making, right? It's a good business. Now this thing's just kind of stuck here, right? We've got bids under 30, sellers at 32, 33. No trade right now. Right? Offers lifting. Look, they found buyers. The offer is the boss. The green line, which is the bid, those are the suckers. The offer is the smart money. If the offer is lifting, it means that the sellers have seen buyers and they're lifting price. Buyers will follow them like sheep. Right? We, as retail traders, have never been educated on how to distribute. We've been always taught to be consumers. Buy this, buy that, right? Stand in line for 6 hours to buy a phone that you have to finance. It's ridiculous, right? We are trained to be consumers. Look at television, look at media, look at advertising. Like in elementary school, they don't teach us, okay, this is how you sell 5 million units of something, right? That's not talked about. We're trained to buy, we're not trained to sell, right? I was trained to be a seller. I have never bought stock in my life. It's always been given to me to do a job, right? End period, the London Open, notice it could not take out the close at 56.29. That's interesting. So there are buyers. Why would there be buyers at that 56.29? Well, because when M period liquidated, people got short down here, and they're bid to cover here. That's the only reason you're going to get bids at 4 a.m. See if we can take out the stop above N. Remember, we have sellers at 36.37, right? We saw them there before. They'll be there again. Now, why would the sellers be there again? Well, I mean, if you sold there 2 hours ago, wouldn't you want to sell some there again? Remember, you've got lots of product to sell. No poor high, Raj. It's 2 ticks, brother. It's squeaked in with 2 ticks. Now, what Raj is talking about is a market profile term called a poor high or a poor low. Now, market profile is a great thing, but you can't really use it to trade. You can use it to get information. I use the candles to trade. I learned that the hard way. It took years trying to trade market profile, and it was difficult trading market profile only, especially when the ranges get really big, because the distance between your stops are huge. So that's why I took the market profile concept of the balance zone, doubling it, and put it on these 1-minute charts. Right? Market profile tells you really, really good things quickly. Right? This video will be uploaded. It's uploaded to YouTube. We're going to try and do them all now, and try and spread some education around, because there's so much bad information about trading, and it's time we kind of set the record straight. See, like right here, when it's working out a level, I don't get involved, right? I'm going to let somebody else pay this bill. And then I don't mind getting long 38, 37 up to 42. That's a nice trade if that works. But otherwise, I'm happy to sit and wait. Yeah. When the chart looks like a barcode, I do not want to get involved. There's so much opportunity in these markets. If you wait, look at that. Someone was short. Yeah, somebody wanted to cover. Stuff the bids here a little bit. This is going to backfill. Let's see if it holds 34 and a quarter. You know, the order books are thin, and in electronic markets, um, the order book can thin out so quickly it'll make your head spin. So their software is so sophisticated that somebody drops a large size order, the whole order book will thin out instantly. Remember, you don't have to call anybody to pull trades now. It's all done so quickly. That's why, as retail traders, our main job is just to manage our risk. Let's say I have a nice look below and fail set up in the US session, but my entry point, for example, is 5 points above the bottom of the balance zone where I have a stop. Shall I skip such a trade, or should I wait until the price drops lower to the bottom? I would wait till it gets lower, RS, and you enter with lower risk. Now, of course, what's the flip side of that coin? That you miss the trade, right? And for me, I would rather miss a trade than chase a trade, right? Once you get used to getting stopped out, missing trades, here we go, right? So let's see if we can take out that 41 and a quarter stop, right? Once you get used to missing trades, see, the thing that retail traders have to deal with is frustration. They get really frustrated, right? Especially because other yahoos are going, yeah, I just made 500 grand and I'm going to go to the Ferrari dealership, right? Which is all BS, right? So you need to block all that out and just focus on your business, right? The other thing too, in RTH, right, in the US session, It's a fast market. Why is it a fast market? Because the market's undergoing change and the large speculators are having a field day and they're eating retail for breakfast, right? So you got to really watch your risk. You got to really watch your risk. Think like the people who used to own the brokerage firm that I first started working at, right? If you don't make a lot of money today or any money today, that's okay, as long as you haven't lost any money. The trick to this business is longevity, to be there in 10 years. See, everybody, like I have a friend of mine, right? I have a friend of mine, and she says, look, I just want one trade to solve all my problems, right? I want to buy this, I want to sell it, I want to take that money, and I want to retire. I'm like, that's not a trade. That's not a trade. That's a lottery ticket, right? Yeah, we're going to be doing this every day, twice a day for YouTube. Um, and what we want is we want you to come and join us in our room. You know, we have a 7-day trial. Come check it out. And I promise you, you will learn more in 7 days with me than in 10 years with anybody else. And it'll be practical, right? Now, if I hadn't been flapping my gums, I probably would have liked a 37, 38 long, but that's okay. I'll let them deal with this and see if we actually accept, right? Yeah, come learn with us. Everything we do is practical. Every trade is based on business, right? Why would we have gone long? Because we ran out of supply. When a market runs out of supply, it will rotate higher to find supply. Why do we go short? Because there's too much supply and the market rotates lower to find buyers. Every trade is a business decision. So that means if the business decision for the trade goes away, you go away, right? There is no reason to be in a trade where the business does not support the trade. This keeps you from FOMO and all that nonsense, right? Everything is a business, right? Hey, Nico, thank you. That's cool. Crypto is a fascinating market. How is the coin of bitterness doing here? 80,800. Did a look below and fail of 77,865. I should actually post those levels. I don't trade crypto. I buy a little bit when it dips and just put it away. And hopefully, you young kids will figure this thing out and make me rich. 42 and a quarter. My levels are a bit about a tick off if you notice on the up moves. So let's see what happens now. There's plenty of inventory above us. So it's not like, in a uptrending market where this just keeps going and going and going. The only reason that the market is up so much is that everybody's asleep and nobody's around to sell, which is why Globex is great to trade because Globex trading is slower than RTH if you're a newer trader, right? I know a lot of traders scream and yell and say don't trade Globex, but it's an awesome time to learn. It's an awesome time. Yeah, of course, you got to use some common sense. If it's jumping around like crazy, don't get in there. But if it's nice and slow and calm price action, you can actually learn a lot. And we're going to come back down to that 34 quarter area. Found some bids. The offer is lifting. Some nice back and forth action tonight. Yeah, I've learned a lot about teaching Nico since 2021. In 2021, I was just learning how to teach, and it's always been a thing for me to try and take this market and put it into simplistic terms that normal people who haven't worked on a trade desk can use to actually make a living. Because so much market education and trading rooms and all of that, they talk a bunch of crap and nobody actually makes any money. Um, how do you make money in a practical way without all this double talk, indicators, right? If I gave you a pencil and a piece of paper, the way we used to do it 40 years ago, would you be able to trade? Right? So everything is based on the business. All trades are business decisions, and risk is built into the trade setup, right? Because your risk is based on, does the trade work or does the trade not work? Is the business supporting the trade? If the business does not support the trade, you must get out of the trade, right? That is just good business. So, for example, if you were doing the fail to look below 34 and you went long 35, 36, your stop would be under 34 quarter, and your target, you know that there's a seller up here at 38, 39, so you'd be letting off a few contracts because you need to compete with those sellers to get rid of your inventory, right? A bit of a tougher trade. That's why we really like that look below and fail like I took earlier, right? That is our fundamental building block trade, which is, and the other thing about the trades that we teach you is that they are scalable in time and size. So learn how to scalp on a 1 minute chart. The same principles you will use to trade longer time frames and hold longer. You know, we have traders just learning how to make 40, 50 bucks and not lose it. That itself is a skill, right? And then we have traders who make 5 grand a day, 6 grand a day consistently, right? And more, right? But they just use the basic principles of commerce. It's bidding that 34, 35 again. No trade right now for me. What I'm curious about is in the next 9 minutes when the next half hour bar opens. And really all this market profile is a half hour candle under a microscope. So you get to see all the volume of every tick and everything like that. Right. So what I'm looking for is, will the next half hour period open over 56.39 and a half? And then we'll have single prints. If not, I think we'll rotate back down. One thing that might confuse is understanding sellers versus short sellers. Exactly. Well, that's a great that's a great statement, Lear. Sellers are people who have product and sell to you on a wholesale level. Walmart is a seller. Target is a seller. Um, and you are a consumer. A short seller is someone who sells something that they don't own, hoping the price goes down, right? And there's a distinct difference. Short sellers don't run the market. Sellers who have the lowest cost basis set the price based on the order flow that comes in, right? It's just a market. That's why we don't call it the stock hot tub, right? It's a market. You come, we sell you something, you go away, right? Everybody forgets that it's a market. Everybody forgets it's a market. And that's how they get you. That's how they get you to overtrade. That's how they get you to not use stops. That's how they get you to make just insanely stupid business decisions, right? Because They make you forget that it's a market and it's a business. That's all we concentrate on. It's all about the business of the trade. Business has to support the trade. If the business doesn't support the trade, you're just whistling Dixie. Guys in the room, how bad is the lag on this YouTube? Is it really annoying? No? Okay. A little bit slower than Zoom. Do I use Footprint? No. No. No Footprint, no nose print, no Bookmap, no, just simple, right? Like I'm 56 years old. I've been in the industry for 33 years. I have a video which uses a footprint chart that I use for teaching, but I highly recommend, thanks, Martin. I highly recommend keeping things simple, right? Because if you just watch the offer, you'll see that when we came down to 34 and a quarter, we didn't offer underneath it. Why? Because they don't have to sell. If you're a seller and you've got 1,000 contracts and you see bidders at 34 quarter, right? Give your head a shake and raise the price. If you don't have buyers, you're going to have to sell lower. It's commerce, right? It's very simple. Candle charts have been, people have written books about candlesticks and all of this stuff, but it's really very simple. The top of the candle is where the seller initiates. The bottom of the candle is where the seller stops selling. See, people just don't understand that there's a wholesale element to this business. I was the wholesale element. That's why I know, right? That's all I did. My clients would call and say at the end of the day, hey, they'd put 15 million shares of stock in their accounts, right? And then they'd start moving the stock and moving it up. And I would just sell every day, right? Create markets and sell into them. They'd call me and they go, JJ, what was the volume? I traded 10 million shares. How much did I sell? We sold 2. Great. Click. See you tomorrow. Right? 2 questions. What's the volume? How much did I sell? They don't care about the price. If it's $2, they got it at half a penny. I think we're going to have single prints, ladies and gentlemen. Now, single prints in market profile are very, very useful. They're a single set of letters. And when those single prints open in the next 3.5, 4 minutes, we'll see. They're created when we took the high of that J period. That was the old high. When we took the old high, people were using that high for their stops. So shorts are technically trapped under 56.39. That's why when you get down to 39 on retracements, the market will stop selling and the offer will lift because there should be buyers at that level. And if there are no buyers at that level, it means the shorts have seen size and are dropping their bids. How to get a job in the industry? These days, you got to be a math person, right? They're hiring math people and coders. Back in my day, it was glad handing, doing favors. I mean, I got my first job because I had 200 clients that I had developed over a 3-year period working in advertising and marketing. All those clients did was sell stock, and we were charging 3.5 to 5% commission on the dollar value of the trades, right? And the head trader of the firm that hired me was dating one of my friends, and we used to hang out when we'd all go out because he was older, and and one day he called me up and he goes, "Hey, JJ, you want a job? We got an opening on the desk." Right? But my first job in the market I got because I took a government job, which was next to the exchange. And I read in Market Wizards that Linda Ratchke had done the same thing. She got a job close to the exchange so she could network and meet people. And that's what I did. I worked for the federal government. The building was located in a building with a bunch of boiler rooms, and my first job was working in a boiler room at night, being a phone chimp. Those days are all gone, though. That was 33 years ago. Now you got to go to school, get a degree in computer science, learn how to code. Where's Mike? Is he not in the room this morning? Mike's one of our guys in a room. He codes for a hedge fund. Well, they run about, I don't know, $10 billion. And we have portfolio managers in our trading room. Our trading room, we have people, we have got a guy who works at a fund that runs 4 billion. We've got people who are, stay-at-home moms. So it's a room for everybody, and it's, we all try and help each other, because this business is this is a crazy business. Yeah, hopefully I'll finish my book. My book is just about my experiences and the 200 crazy clients that I had. There is a seller at 43.5, and they're not shy about showing it. Let's see if they lift. Now, when we go sideways like this, that price stability brings buyers, right? Buyers love price stability. Yeah, one of these days I've actually got to finish it. That's the problem. About 200 pages written so far, 100, 200 and something pages, but I haven't actually finished it. I should finish it before nobody wants to read it. Hey, I finished it. Yeah, great. Nobody wants to read it. All right. So these are single prints, right? They will show you where the bid is, right? So as the market comes out, I'll stay on an extra couple of minutes. Watch. Now we're going to go backfill, and where the market stops and that offer lifts are where the bids are. Look at this, eh? See, the bid is dropping. The offer's coming in to hit it. So it fills all the way back underneath 39, then we fill that short position. This is a little short position here, right? This all this is a little short position between 39 and 41. So market profile helps tell us where the bids and offers might be, and then we use the 1-minute chart for execution. So here's our balance. You double it, and then if we break 56.50, you just stack 4 of these on top of each other and change the color, so you can keep track of your zones. And why that's important is, if you're buying it here, you're buying it at 2 times cost basis. So is it going to go to 50? It keeps you grounded, and it makes you manage your expectations, right? If you're shorting and you're at 8 times discount, should you really be shorting in the hole, right? Just helps us. Situational awareness is the biggest thing in this business, right? Most people lose track of where they are. Now let's see if that thing bids at 39, right? So we filled the single prints. Not surprising, because we had a massive liquidation yesterday, right? See how we stopped at 39.25 to the tick, and the offer lifted because the shorts are trapped there. They're bid to cover. Anyway, that's it for this morning. Thanks, everyone. Stay out of trouble. Come visit us at microefutures.com. Appreciate you guys being with me at this crazy hour. And we will see you all in RTH. Yeah, the next session will be at 9 a.m. Eastern time, which is 1 p.m. UK time. Thanks, everyone. Bye for now.